Who's behind the recent rise in home prices? Is it Wall Street? When you're out there putting an offer in on a property, are you actually bidding against an institutional investor? That's what we're going to dive into in today's video. We're going to talk about companies like Blackstone and some of these individual investment companies that are buying property and how it might be actually putting a floor in home prices for home prices to continue to rise over the coming years. Now, a lot of you have reached out to me and wanted me to cover companies like Blackstone and talk about how they're the culprit here. They're the ones causing the problem. And we are going to talk about some of the strategies that they're starting to employ that I think could affect housing prices, but it's not what you think. But let's take a minute here and talk about the last time we saw a ton of institutional buying. This was back during the last housing crisis, right? 2006 through 2008, we saw turmoil in the housing market. We had supply levels at 10, 11, 12 months of supply, right? Which is well above what we are right now, where the average months of supply is somewhere around 1.8 to 2% in most markets. In some markets, it's much lower than that. But, back during the last housing crisis, we had a ton of inventory, right? There was a lot of property out there. Values had decreased. People owed more on their homes than it was worth. And what we saw during that time is a ton of institutional buying, right? These companies came in, the Blackstones of the world, these big conglomerates, and bought a ton of property. And that kind of put a floor in prices, right? And this was more towards 2010, 2011 when we started seeing all of this buying. And a lot of people out there started talking about shadow inventory. If you've heard the word shadow inventory, this is the property that they're referring to. It's these investment companies owning all of this property. And the idea was, that at some point in the future, they might list this property back on the market because they bought it so cheaply, 10, 20 cents on the dollar in some cases, because they bought, millions and millions of dollars worth of property. And at some point when those values increased, those companies were going to put that inventory on the market, and that was going to cause this next housing crash. And so you have people that have been sitting on the sidelines since 2010, 11, 12, whatever it is, thinking that there was another housing crash coming because there was this shadow inventory that was going to hit the market. But it never happened. These institutional investors actually kept that property and turned these properties into rentals. And these were small rentals. We're not talking about communities here. We're talking about individual properties, and they were spread all across the United States in different markets and what have you. And these institutional investors became landlords, if you will. But institutional investors actually only make up 2% of single-family homes. The majority of what they own is actually multifamily homes. They own 55% of multifamily dwellings, where most of the single-family rentals are actually owned by mom and pop landlords. So that was 2010, 11, or what have you. And since then, these institutional investors have still been buying property, but not at the levels that we saw back then, right? We were talking hundreds of millions of dollars back in the day, and now we're talking maybe 20, 30 million a year since then. And this is based on the report that I'll link to here, and I'll actually put the link in the description below. But what we're seeing now is a little bit different, right? Everybody, again, is talking about the Blackstones, and that's who you're bidding against. And the reality is it's not. When you're out there purchasing property and you're having trouble getting your offer accepted, it's not because you're bidding against an institutional investor. It's because there's very low supply, you have a lot of buyer demand, and there's a lot of people that want to purchase property, right? You've got millennials moving into the home buying stage, and you've got move-up buyers moving up, you've got investors buying property, you got people buying vacation homes. There's just so many factors playing into this. And so when you're making an offer on a property, chances are you're not bidding against an institutional investor. In these cases, you're bidding against another potential home buyer, somebody that's going to live in the property, somebody that might be buying the property to rent it out, but not necessarily a big company. But there is a strategy happening that you need to be aware of, and it's something called BTR. It's called build to rent. And what's happening is these big conglomerates, these big institutional investors are now, instead of buying single family dwellings, one property here and there, because what happened last time when they bought property, they were able to buy these properties in bulk, right? Because the banks foreclosed upon them. They had a lot of property and they were able to sell all of these properties to one investor at the same time. Right now, you don't have these distressed properties, and therefore these institutional investors can't buy properties in bulk. If they were out there buying, they'd be buying them individually, and quite frankly, that takes too much time, too many resources to do that sort of thing. But what they are starting to do is this BTR strategy, this build to rent strategy, where they're buying entire communities. If you heard me talk about it on a video that I did in the past, there was a community in Texas. I think it was like 115, 120 homes, and it was like KB Homes or DR Horton. I don't remember the actual builder of the community, but they sold the entire community to a pension fund out of New York, and this pension fund is going to keep that community and turn the entire community into rental. And this is becoming an asset class, right? In these portfolios. This is, because of potential inflation, because of potential rising costs in the future, these institutional investors are now able to protect themselves through owning real estate, these asset classes that they've designated to become rental property. And it brings in a fixed amount every single month. They know exactly what they're going to get. And that's the new strategy. And so you have these companies now that are basically going to these builders and saying, hey, look, we don't want to just buy one home. We want to buy the entire community. And it's happening in areas like Boise, Idaho. It's happening in Dallas, Texas, Jacksonville, Florida. And these are markets that already have anemically low inventory levels. And so now when you have builders out there catering to these larger investment funds, that means less property that they're actually building for the individual. And this could create an issue because, last week we talked about Dr. Lawrence Yun, National Association of Realtors chief economist, coming out and saying that we're behind nearly 5.5 million properties, which means that, on average, they would have to build about 700,000 more homes per year for the next 10 years to catch up. So we're well below where we should be with regards to inventory levels because of the lack of new construction, the lack of building, because of restrictions that were put on these builders during the last housing crisis, and because a lot of communities don't want building. Land is expensive, the cost to build is expensive, and so you just have less of these builders building property, and now you throw in investment companies, these big conglomerates looking to buy property in bulk. And so now the builder is going to be backlogged to some extent, right? They're not going to be able to focus on building individual homes because they are likely going to be catering to these bigger investment funds. Now, is this going to happen in every community? No, absolutely not. But think of it from the building perspective. If they can build a community and sell the entire thing before it's ever built, that's, that makes a lot more sense to a builder than having to build individual homes, in different phases and hire these different resources to sell them and worry about financing and worry about what have you, versus just building the entire community and selling it up front before it's ever built. That, at the end of the day, is the best strategy for the builder. Now, for the individual out there looking to purchase a property, this presents an issue because this means less available property to choose from. Inventory levels aren't really going to go anywhere for the foreseeable future. And you likely have interest rates staying low. So buyer demand is probably going to stay pretty high for the next couple of years with interest rates low. Supply is going to stay low. And any new property that's out there, there are going to be new communities, but in that big world of new construction, you might be in an area that you're competing, with new construction against these bigger investment companies, and that could put some sort of a floor in home prices in some of these areas, right? Because if you have somebody willing to come buy an entire community, that just takes that inventory off the market, where your individual buyer can't buy it, and it puts that buyer in a position where They have to either, build, buy in another community that's new construction, or go out and buy resale property, which we already know the issues there with the lack of supply. So it's going to be interesting how this strategy plays out. But, the fact that these big investment companies are now starting to form asset classes just around new construction property, around owning property, I think presents further issues with supply. And because of that, I think you're going to continue to see home prices, move sideways to up. It's not likely that you're going to see a big pullback in pricing until you see these supply levels increase. And if companies are willing to come in and buy these properties like this in this environment, chances are we haven't reached that point at which supply is really going to build. But we will continue to see as more information comes out. I'll continue to update you on the housing market as I get more information and keep you in the loop, and give you my thoughts on moving forward. But something to pay attention to, especially if you're in some of these bigger areas where they're building new construction, or if you're seeing communities built but they're not selling. Maybe it's because, there's already a plan for those properties in the long run. But anyway, I appreciate you taking the time to watch. Would love to know your thoughts in the comments below. What have you seen? Have you seen properties in your area that are sitting and not selling? And maybe you thought it was just, the new construction companies couldn't sell the property? Do you think it could be this BTR strategy? Would love to know. But I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.